All right. So top 5 things to watch. So Kev, I'm going to let you kind of run with this one.
Number five. Okay, so for those who don't know, when the dollar broke out after the FOMC meeting, I told Patrick, I said, I'm standing in here, I'm selling this breakout.
Oh, yeah.
As per the plan. Remember, I had spoken about it, that I was shorting half, and then the other half I was going to give him to on the rally.
Yeah.
And I was feeling pretty good, and I said I'm shorting it because I think it's going to be a prairie dog. And I swear to God, it was a couple hours later, I get this text from Patrick, and he says, "For your information, I pulled out my .22 and shot your prairie dog." And then the dollar proceeded to dish shit the bed after that. I swear to God, your timing was impeccable.
Oh, okay. Stop for a second. Trump. I got trumped.
No, that's not true. It was actually already rolling over even before Trump, but he did help.
Just a little bit, don't you think?
Yeah, he did, but
and before you take,
but then if you're going to say you're going to be trumped, okay, I see prairie dogs everywhere.
Before
that is me. That is
you.
I do see prairie dogs everywhere.
You're such a contrarian.
This is what happens when you grow up in Manitoba, because there literally are prairie dogs everywhere.
Yeah, it's
exactly. So I see them everywhere.
There you go. And so, you know what? Before you take your victory lap, right?
Yeah.
The dollar was overstretched. I mean, we went during this rally. I mean, as a swing trader, trading an hourly chart, fading this kind of an advance in the dollar over the span of a week and a half is a no-brainer. But
oh my God! Now all of a sudden it was a no-brainer.
All I'm saying, all I'm saying.
But what happens
if you're a day trader? Look, if you're a day
Yeah.
trader, congratulations, you clipped your point. All right, you know what? There you go. You can do your little victory lap. I don't think this changes anything. I think that the dollar index here, this is going to pull back here for a week. It's going to be a buy on dip, and it's going to be making higher highs. This is all you're doing is taking a victory lap for a short-term swing trade. And congratulations, I'll give it to you. I'll give it to you.
Wasn't taking a
you are the
lap.
day trading champion of the world, buddy.
I was pointing out the fact that your tweet or your kind of text to me was just the timing was beautiful. That's all
I know it was.
Okay.
I was just poking a little bit at you, but it worked out perfectly. You know, I did you a favor because I was long gold.
I agree.
And that helped me out a little bit.
Yeah, I did.
All right.
Number four.
We had to talk about this Chinese yuan, the renminbi. Like, I mean, the moment Trump fired those tariffs across the bow, we had a pretty significant breakdown, right? And this is a managed currency.
1 second.
Right?
Can we do it properly?
What?
Can you move it to the proper, so we can see it? Everyone knows 7. And then you got this thing 0.1403.
Yeah, it's a 7.
What is that? Nobody knows. Okay, so there we go. So up means yuan weakness, just so everyone knows. Okay, so we're pushing up back against that 7 handle. Is this
the point
offshore
is that the
onshore?
PBOC has no reason to defend its currency if Trump is going to be and its pegged area if Trump is going to be throwing tariffs, right? So I think that this is them giving a warning that you want a weak dollar. Well, they're not going to play ball.
What? Okay, so listen, this is a small little move in the grand scheme of things because, if you go back and look at the moves that they've done throughout history, we could wake up and this thing could be 9.
Fair enough,
right?
And, I mean, we went from 6 1/4 to 7. In a span of 2 months. 3 months.
Yeah, but go back in terms of before we, it used to be this peg currency, and you'll see.
This is. Hold on, let me pull it. Let me put up the CNY.
Yeah, and you'll see that they really move this thing a lot. So it'll be interesting to see if we do get a situation there. You go. So
this is a monthly chart, though, dude.
Yeah, but a lot of those moves happen in one fell swoop.
So really, but though we do have to kind of observe that the $7 level has been tested on multiple occasions since 2016. So a break of that level to the upside sets in motion potentially
a lot of stuff. A lot of stuff. But before I do anything more, talk about the fundamentals, put that chart back up. And I don't practice the dark art of technical analysis. But is this not a cup and handle like you've never seen?
Yeah, no, this is ready to go. I mean, at this stage, but you know what? No, I'm going to be the contrarian. It's going to prairie dog, buddy. It's going to prairie dog.
Oh, that bad boy's not prairie dogging. If they let it go above 7,
I'm not going to bet money on that. I'm with you actually, so we'll see.
Yeah, if they let it go, they know that there's going to be an avalanche of it. And if they let it go through 7, they'll let it go for a while before they'll wait for everyone to kind of be leaning into it really hard and for it to get really kind of toppy, and then they'll go back. But anyways, I just think there's a lot of risk. There's a lot of fundamental risk to this. This is actually the chart to watch, because if that changes, if it ends up being that Trump is kind of instigated a trade war that's going to be executed through currency devaluations, then you're going to find that the risk in the system is going through the roof.
Right. All right, number 3. I wanted to ask the question, is there another leg higher coming here in the bond proxies? Obviously, bonds took off again after the FOMC and tariffs. And so we have...
Well, it was really the tariffs, right?
It was the tariffs that launched particularly what's amazing is it's at the longest end of the curve, the long duration bonds that took off so spectacularly. Like, look at this. This is the 30-year chart, right? 30-year bond, and just like what a breakout. The point, though, is that those bond proxy sectors, particularly the two I was going to mention, was utilities and the REITs. Seem to be at least initially immune to the market weakness, and seem to be actually behaving half decently. Let me pull up the XLU here, and while you can see here the XLU, which is the utilities, have kind of turned back up, heading back toward those highs. But if you take individual names, let's say a Southern company or something like that, already broken to higher highs, right? And then you have XLRE, which is the REITs. You can see they're edging right back. They have almost no weakness in the last few days while the market's breaking, and it seems to be heading right back to the highs. So do we have another leg coming in these bond proxy, high dividend paying sectors? What's your take?
I feel like I have lost all kind of ability, or not ability, or like
credibility.
Credibility.
You definitely have lost all your credibility. Yeah, you see
on the bonds. I don't know. Listen. I would have never thought we'd be here. I would have never thought that this would have gotten this bad. And the fact that this is doing this, and I'm not sitting in here telling you that they're going lower, is probably a sign that they're going lower.
So here's my opinion. Yeah. This is late stage. I mean, whether you want to call this, to give it the baseball analogy, is it the 7th inning, 8th inning, 9th inning? Are we in overtime? I don't know. I think that there's room for these to break out still to higher highs. But I think they're much closer to the ultimate turn point where they're going to be big sells.
Are you talking about the proxies, or are you talking about the bonds?
Proxies.
Oh, because the bonds you love.
Well... But no, look, at some point the bonds will run out of juice to the upside too. I mean, if the TLT rips to 140, you have to ask yourself whether or not you want to keep squeezing the lemon juice out of that lemon that's been squeezed that much, right? There's a point where the risk-reward proposition diminishes, right? And so...
Well, no, but this is where the convexity kicks in and you really get the big up moves. And don't forget, according to Citibank, the 30-year Treasury is the cheapest asset on the planet. And I shit you not, that was this report given out yesterday.
Wow. I'm long bonds. I'm happy to be there, but I don't know if I want to drink that Kool-Aid. Look, I'm a trader.
We're too busy having your sours.
I'm a trader, and I'm going to continue to try to profit from the upside of bonds, but I'll have my one foot out the exit door at some point. I'm not going to stay married to this trade forever. And when it gives the signs, I'll go. But anyway, The proxies, the REITs, and the utilities, I think that they still break to higher highs. I still think they go, but I think you're playing with fire because at some point that's going to run out of juice on the upside, and they're very expensive at these levels, in my opinion. Do you agree with that?
I don't disagree, but as I say, no credibility here in terms of anything fixed income.
So you want to talk gold?
Gold and gold miners. And I guess one of the things that I noticed is GDX. Pull up that chart. I find that an interesting chart.
Well, first, here's gold. And we are breaking to 52-week highs.
Yeah.
Right? 1458 on this chart. And a lot of technical measured moves are all pointing to 1500 to 1550. So there's a little more juice left in gold, technically anyway. And but you want the gold miners, the GDX, right?
Yeah. I found the action in the last couple of days actually very interesting. We had what looked like they should have got some big selling, and they were met with buying. And I look at this and I'm not trying to say that they should be you should be buying them up here, but I do think that it's interesting that there was every excuse for this thing to roll over, and it doesn't seem to be. I worry that one of the things that you might make a mistake on with gold is by assuming that it's run too far too fast. Because if you step back into the big picture and think about it, if we're going into a currency kind of war, which I do believe that there's a very good chance we are, and we're getting into a situation where interest rates are all negative, and even in the States, they're becoming negative in a real basis, gold could fly. Like, I think the mistake could be saying, like, gold, it's only, it's gone $100, so I have to sell it. And the reality is, it might be going for the big move. This could be it. So
just look, you don't Gucci for everyone, but I want to point
out.
No, I know. But I want to. So just say something that undoes your Gucci here, because you just set it up for the Gucci. So just say some words of caution.
Well, I'll tell you why it might be right, and why I don't own very much of it like that up here. So that's why it could really explode higher. So don't worry about it, folks.
All right. So what I wanted to point out is go back to 2016. It did something very, very similar in the two green boxes I have, right? And it basically blasted off, and it took about let's just round that to like 8-9 weeks. Back then in 2016, it went from $13 up to 21, and so a lot of people already witnessed pretty much a double in short order. That's compared to now, we only went to 20 to 28.
Yeah,
and then if you sold, you missed the move from 21 to 31. Which was where the next major leg was. And the point is that I'm not saying that it has to play out the same way, but if gold's going to 1500 plus and this thing cracks 28, I mean this could be 35.
Yeah.
I mean.
I agree. Don't ever forget that great presentation that Grant Williams gave, where he said I can't remember, it was called What If or something of that nature. And it was just, he went through and showed how small the gold market is in the grand scheme of things, and how much a little reallocation on the kind of pension plan and endowments, a little reallocation can send gold and the gold stocks flying, just flying. So
down. I think it was Grant said something on the lines of that. Down at the bottom, the capitalization of the entire gold miner space had the same market cap as Cisco Systems.
There you go.
You're right.
It's so small.
It's so small that if people want an allocation, there isn't enough stock to go around. Anyway,
so just
we can
careful
daydream,
shorting
right?
it. Yeah, just be careful shorting that thing, because although I agree that it is kind of crowded, at the same time, the possibility of an outsized move, and if you want to talk about like convexity and stuff taking off, that's where I think it would take off more than a bond. But anyways, go on. Number one, what do we got for us?
Number one, listen, all of our listeners want to know what we think. Was that a major market top or not? Look, I've been looking for a market top for a couple months with some straddles on open. So I think that it's pretty clear that I have a bit of a bias, but I think that there's a couple of key technical hurdles that have to be still beat. For me, I think that there's room. There's some fib levels down around even the mid 2800s, where in theory, if this market pullback lasted just a few days, reversed and then shot back up, it could have just been a buy on dip. The real technical damage, where it's going to be very hard for the bulls to undo it, is all south of that, because at that moment the bear market could take a life of its own, and that's where those kind of liquidity plunges can really accelerate. So to me, there's not enough technical damage to say that this is all bearish from here. The buy on dip traders can show up on Monday, and you can look at this chart and say nothing. It did nothing wrong, right?
Well, so Patrick, first of all, this will be a very unusual event because I think both of us got bearish. You gave me a lot of flack for turning table up there and becoming bearish. So at this point, we were both
you
bearish.
made a great call.
You made
a great call.
We might both be right. I'm going to go out on a limb here, and I'm going to say I'm actually getting worried about something more ominous than you are. I think that it's I'm not saying it's for sure going to happen, but for the first time, I'm actually worried about stuff. I think the action in the yen, I think the action in gold, I think that the odds of the renminbi doing something strange, even bonds are kind of, I feel like the volatility is going through the roof, and that's all those things, point to more weakness ahead for the stock market. And the fact is that we're doing this in August when there's lots of people away. Famously there was
lower
the flash
volume.
crash. Yeah, but things like that. I
think there's a lot of people that are scared of taking action in this month, because like August, September, October have such a notorious history that a lot of people may be far more reluctant to stick their neck out and put big size out there to defend the price, right?
For sure, and there's a lot of stuff that's trading kind of sketchy right now.
But how about the sentiment? Do you know what? If you go back to June and even go back to the April-May high, there were so many people that were bearish. It was super crowded. But I feel that this time around, that same choir of people are very quiet.
Well, but don't forget, we were giving Mike Novogratz a hard time, but there was all of a sudden when it went back up to 3,000, and you were giving me a hard time because I had flipped bearish. I was saying, why now that we're up here, what's wrong with selling something that, that's going up and buying something that's going down? And I think that there was a fair amount of people that were talking about it blasting off, and for the first time, this idea of why you used to give me a hard time because I said we would have. What was it? The rally? You'd call it the.
What did I call it?
What did you call it? Anyways, with too many beers for us already,
yeah.
Patrick. So the takeoff rally, and we sat there, and you gave me a hard time about it. And then when I flipped, it was a lot of people were disappointed and said, no, the blow off rally, right? And everyone said a lot of people for the first time were looking for it. So I actually disagree. It felt to me like the sentiment had changed, and that we did finally get some people throwing in the towel and getting bullish. But regardless,
throwing in the towel on the shorts.
Yeah.
Yes.
But regardless,
I agree.
Patrick,
that's my point.
The reality is that when the facts change, you have to change. And I think that Trump... No, but I think Trump really did throw the whole market for a loop with this recent development. I think it's a bigger deal than the market realizes yet.
Yeah.
Because I think, and the other things, Patrick, I talked about this on Twitter a little bit. Let's think about this. He didn't understand for a while that he was able to go and put on tariffs on his own. It was when he first came in, he started complaining about it, and then he figured out that he was allowed to unilaterally put on tariffs. So what did he do? He started putting on tariffs.
Right.
Okay. What is he complaining about now? He's complaining about the dollar.
Yep.
I think that
and interest rates. But I think that it's a double-edged sword.
He got what he wanted, or somewhat what he wanted on interest rates. He's basically bullied Powell into doing his bidding. Maybe he's not as kind of dovish as he wants him to be. But wait until he figures out that he can actually go through the Treasury and start to influence the value of the dollar. So the only trade that I actually feel good about, Patrick, down here is buying FX vol. That's probably my only high conviction trade down here. Because if you go look at FX vol versus stock market vol versus bond vol, both of which are elevated into this, FX vol is almost on the low still.
Yeah.
And that's because for a long time there was no currency wars, there was no issues. But just wait and see what happens when all of a sudden, China says, "Well, screw you," and wake up and it's we're trading at 9-1. And let's just see what happens when Trump goes and says, "Well, guess what? We're gonna, Europe, we're gonna go sell dollars." Anyways, I think that there's a lot more risk in the system.
Well, listen. So you actually give it a better odds than not that could be a major top.
Yeah, I probably do.
Yeah. Well, you know what? Listen, my wallet will love you if you're right. Because I don't have very many long positions other than in some beaten up energy names and a few of these little kind of periphery areas. So I'm not going to complain.
Now having said that, if tomorrow he goes and he does a trade deal and it doesn't look like it's escalating and there's a few things happen, I reserve the right to kind of give up on that call. But right now, all signs seem to point to me to the fact that it's only going to get worse, and the situation is that there's very little liquidity in August, and there's lots of things that are trading like a rat on acid, and I think it's a time for the sidelines more than anything else.
All right, you heard it here from Kev. Let's move on.